Hello everyone, welcome to the Ichimoku.co chart of the day. Starting with the S&P 500, and trend continues to the downside today. Some strong selling for the third consecutive day. The market trading down through important potential support around that 2694 previous support and then resistance level. It has held as support and resistance on multiple occasions, but for today we have taken that area out in a fairly decisive way with a fairly large bodied candle and a very large ranging day. The range of today is very much larger than the two previous days, and just looking at the size of this range compared to the previous, it suggests that there was very strong eagerness from the sellers, but it is looking something like an extreme candle. Now, considering that we are the third day into these extreme type candles, and this is the largest, that we could start to see the sellers lack some interest, and we may see an end over the next day or two to this very strong and significant downtrend in the first term time frame that the market's been in. A little bit of a clue here, not overly strong, but certainly this previous 2665 level has seen a lack of acceptance at those levels. We can see the shadow on the top here, and we see upside price rejection from that area. So this suggests that the sellers may be just starting to lose some commitment to driving this market lower. Now, having said that, however, we do need to continue to watch these areas 2665 and the previous support area 2652. They will be crucial if there is going to be any further downside. And if we do see strong bearish activity down through these areas, we could over the following couple of days see the market move down to the round number 2600, where we are likely to find very, very solid support. So just summarizing, the sellers are very strong, but just a slight lack of commitment at the end of the day perhaps sets the market up for a potential move to higher levels and an up day for the next day. Now, the thing to watch, however, is if we do see the market attempt to move higher, we may find resistance at this previous important area at 2694, and then even if the market can trade through there, we may find resistance around the bottom of the Ichimoku cloud around 2704, where we're likely to find the Kijun Sen trading close to that area as well. So it is going to be tough for the buyers to come into this market and move it back up to levels through the top of the cloud, and the top of the cloud is at a very high level compared to where we are previously, 2774, because of this thick cloud. So very strong resistance before we can call a strong uptrend in that longer term time frame. Now, importantly, with the market closing down through each of the Ichimoku indicators, we do have a bear market in all three timeframes. If we look at the position of the Chiker span, it is below the corresponding price activity, and the Chiker span has been below price activity for some time, and all through quite a bit of this rally we were still seeing negative momentum in this market, and it didn't support this bullish activity that we saw to high levels. We saw a couple of breakouts but didn't see any strong follow through as we were attempting to break out, and the market was unable to be sustained above the Ichimoku cloud. Now, just looking to our pitchfork technique, and we're examining the relationship of the first time frame downswing to the immediate previous first time frame upswing and the prior first time frame downswing. And here we see the market moving down through that pitchfork, that lower pitchfork level, and it does suggest that there is some weakness in terms of this downtrend, that the sellers are quite strong here. But importantly, the market at that first warning level saw some rejection and lack of acceptance at levels below there, with the market closing just around there. So some support coming in around that region. So it does suggest there is a possibility of a bounce, and obviously just bearing in mind potential areas of resistance, but also if the market does move through the top of the cloud over the next day or two, looking for resistance to develop at that lower pitchfork line, and for the next day will be around the 2720 level. If the market does continue in this downtrend for the next day, we will be looking at the second warning line at 2643 to hold as support. And then just moving to our higher time frame pitchfork technique, where we're looking at the second time frame swings in this market, second time frame trend, and Importantly, the market has closed down below the middle pitchfork line, suggesting that we are seeing some weakness in this second time frame uptrend that the market is in. Obviously, we know that because we have taken out that previous swing low. We don't have a downtrend in the second term time frame yet, but there's a possibility of that occurring. We are seeing certainly a loss of upside momentum for that second term time frame uptrend. Importantly, if this first time frame downtrend does continue, looking for support at that median line between the two, between the lower pitchfork line and the median line, and that line in the middle, that line that intersects the median line. I think I called it the median line. It's that internal warning line, and looking for support there, and it will be around the 2625 level over the next day or two. Next, we'll take a look at the Fibonacci extension tool and examining the relationship of the first time frame downtrend to the immediate previous first time frame downtrend. And here we see the market moving down through the 161.8% level. We have a target at the 261.8% level for potential support, and just watch how the market reacts around this area if the trend does continue. It's at 2640. And as mentioned before, that 2640 level is very close to that second warning line on the first time frame pitchfork technique around the 2642 region. So potential for some strong support to come in around this area, roughly around 2640. And also with the Fibonacci retracement tool, we are trading in a bearish manner down through that 100% level, and our 161.8% level could come to play, and it's at 2641. So this region around this 2640 to 2643 level, we have a confluence of support around that level based on different techniques, and it is an area that we do need to watch keenly. Now, the important thing here is watch how the market reacts around that level. Don't just blindly follow it. If we see a lack of acceptance down at those levels and the buyer starting to gain some power, then we could see a change of trend back to the upside. And this obviously does depend on that trend continuing down. If we do see a breakout down below this region, then we'll be looking to other levels based on these techniques. So very important area down there if the market does trade to there.